Good afternoon, investors. You are now on Kleverstock with me, Wan Izul Islam, and I will be serving you the midday roundup with the latest market updates from this morning up until now. So, we're going to be kicking it off with the Bursa Malaysia updates. Bursa Malaysia opened slightly lower on Wednesday, despite overnight gains on Wall Street, as investors adopted a more cautious stance amid overbought technical conditions ahead of the Christmas break. Now, at around 9:11 a.m., the FBM KLCI slipped 1.19 points or 0.07% to 1,675.45 after opening marginally lower at 1,676. Now, overnight, Wall Street ended higher with the S&P 500 closing at a record high following stronger than expected U.S. economic data. U.S. gross domestic product or GDP expanded by 4.3%, supporting growth stocks despite firmer bond yields. Now, the Dow Jones Industrial Average rose by 0.16% to 48,442.41. The S&P 500 gained 0.46% to 6,909.79, while the Nasdaq Composite advanced 0.57% to 23,561.84. On the local market, decliners included Time.com. They slid by 8 cents to 5 ringgit 48 cents. Maybank was down by 6 cents to 10 ringgit 48 cents. FACB Industries eased up by 4 cents to 1 ringgit 54 cents, and Solarvest shed 3 cents to 3 ringgit 21 cents. Gainers saw Nestle climb 30 cents to a total of 115 ringgit 60 cents. KSL added 10 cents to 3 ringgit 6 cents. Petronas Gas also rose by 10 cents to 18 ringgit 10 cents. And Malaysian Pacific Industries increasing by 8 cents to 32 ringgit 82 cents. Bujaya Research said the FBM KLCI is expected to trade on a firmer but measured footing in the near term, supported by positive external cues following the stronger US GDP reading, which has reinforced global risk appetite. However, it noted that the index is hovering in overbought territory based on the relative strength index, suggesting near-term upside may be constrained, with a pause or consolidation likely. Now, in a quote, he said that should further upside prevail, the next resistances are located at the 1,675 to 1,680 levels. Near-term supports are seen at 1,648 to 1,638. Meanwhile, Rakuten Trade, they expect the market's undertone to remain resilient ahead of the Christmas break, noting that foreign funds may be rebalancing portfolios into domestic stocks. They added that the stronger ringgit, currently around 4.06 against the US dollar, could see the index hover between 1,670 and 1,685 today. Now, we're going to be moving on to some local currency and foreign exchange. The ringgit climbed to another 5-year high against the US dollar in early trade on Wednesday, and that was buoyed by a weaker greenback as the US dollar index retreated following softer US economic data. At 8 a.m. this morning, the local currency strengthened to 4.0490 or 4.0710 against the greenback. And that was from 4.0615 or 4.0665 yesterday's close. Now, the ringgit last traded at this level on March 3rd, 2021, when it touched 4.0490 or 4.0530. Bank Muamalat Malaysia Berhad Chief Economist Dr. Muhammad Abzan Izam Abdul Rashid said the DXY fell by 0.39% to 97.903 points after the Conference Board reported that US consumer confidence declined to 89.1 points in December from 92.9 points in November. That's undershooting the consensus forecast of 91.7 points. Now, he also noted that the ringgit had already closed 0.39% stronger at 4.06 against the US dollar on Tuesday. Afzal Nizam explained that as such, the ringgit could maintain its positive momentum, supported by the latest US economic data. Now, at the opening, the ringgit also traded higher against a basket of major currencies. It appreciated against the Japanese yen to 2.5934 or 2.6076. It also strengthened against the British pound to 5.4718 or 5.5015. And our ringgit also rose against the euro to 4.7762 or 4.8022. Now, the local currency was also firmer against regional peers. It advanced against the Singapore dollar to 3.1524 or 3.1701. Our ringgit improved versus the Thai baht to 13.0126 or 13.0921. It also strengthened against the Indonesian rupiah to 241.2 or 242.6 and edged up against the Philippine peso to 6.88 or 6.92. Now for some local economic news. The ringgit's rally against the US dollar is expected to bolster profit prospects for import-heavy domestic industries, while posing headwinds for export-oriented sectors due to adverse currency translation effects. Those are said by an analyst. Now, the local currency strengthened to 4.0490 or 4.0710 today, its strongest level since early March 2021. And that's underpinned by broad US dollar weakness and improving domestic fundamentals. Now, analysts attribute the gains to shifting expectations of US interest rate cuts alongside stronger external balances and ongoing policy reforms in Malaysia. Now, domestically focused and import-intensive sectors such as consumer, automotive, aviation, construction, and healthcare, they're seen as key beneficiaries of a stronger ringgit, as lower import costs for goods, raw materials, and intermediate inputs help ease cost pressures and support margins. TradeView Capital Fund Manager Neo Jia Man, he said the automotive sector stands to gain as manufacturers rely heavily on imported components and, in some cases, fully built vehicles. Consumer discretionary and staples companies are also poised to benefit, particularly large food and beverage players such as Nestle and F&N Holdings Berhad, given that major inputs like cocoa, coffee, and sugar are priced in US dollars. Now, Neo said that these larger F&B companies tend to have stronger pricing power, allowing them to retain cost savings rather than pass them on to consumers, which supports margins. iFast Capital Research Analyst Kevin Kao Kai Sheng, he said that banks, consumer-related companies, construction and real estate players are among the sectors likely to gain from the ringgit's appreciation. In the banking sector, he noted that a stronger currency typically coincides with improved foreign investor interest, particularly in equities with inflows channeled through the domestic banking system. Now, stable or gradually appreciating currency also supports credit demand and improves asset quality for banks. That was said by Kao. Now, he also added that consumer names such as Mr. DIY Group could benefit as a significant portion of inventory is sourced overseas, reducing that of import costs. Construction companies are also expected to see margins support as many rely on imported materials, while Malaysia's positive growth outlook next year underpins sector demand. Now, in contrast, export-oriented industries including furniture, technology, and glove manufacturing are likely to face pressure as foreign currency receipts narrow. Neo noted that export growth has already moderated to around 7% in November from about 16% in October, with weaker performance in electrical and electronics, rubber products, palm oil, and chemicals. Now, still on local news updates, the Agriculture and Food Security Ministry, KPKM, they recorded strong progress across Malaysia's agri-food sector in the year 2025, reflecting the government's continued push to strengthen national food security, modernize agriculture, and ensure long-term sustainability. Now, the ministry said its performance this year was guided by its 5 key directions and 4 focus industry frameworks, which has translated into higher productivity and also tangible benefits for the rakyat. Now, among the standout initiatives was the Jualan Agro Madani, also known as JAM, program. That continued to ease cost of living pressures by offering essential food items at prices between 10 and 30% below market levels. Now, from July 1st to November 2nd, a total of 2,422 JAM programs were organized nationwide, involving more than 30,000 entrepreneurs. The program generated cumulative sales of 39.28 million ringgit, while also delivering 11.25 million ringgit in cost savings to consumers, with 1.64 million visits recorded during the period. Now, the Smart Large-Scale Paddy Field, also known as the Smart SBB initiative, remained a key driver in boosting national rice production as of November. Now, Smart SBB had expanded to 92 locations nationwide, covering 46,580 hectares and benefiting 18,650 farmers. Now, the implementation of the 5th paddy wave helped lift average yields to between 6 and 7 metric tons per hectare, supporting efforts to enhance Malaysia's rice self-sufficiency level. Now, in the livestock segment, the ruminant industry continued to be strengthened through programs led by the Veterinary Service Department, as well as the Farmers Organisation Authority under the National Beef Industry Development Strategic and Action Plan 2021 to 2025. Now, these efforts are aimed at raising the beef self-sufficiency ratio to 50% by 2030. Strategies included the operation of 68 satellite farm units, expanded feedlot capacity, and breeding programs that introduced more than 45,000 livestock through initiatives such as Program Rescue Ternak, Program Peningkatan Ruminan, and Program Peningkatan Kadar Kelahiran. KPKM also advanced preparations for a new grain corn industry strategy covering 2026 to 2040. The roadmap targets domestic production of 1.25 million metric tons of grain corn by 2040, which is expected to reduce import dependency by about 30% and further strengthen national food security. Now, the establishment of the Malaysian Grain Corn Producers Association was also cited as a key step in reinforcing the domestic value chain. In aquaculture and fisheries, output also rose to 409,383 metric tons for the year, and that's supported by the distribution of 20.7 million fingerlings and seeds. The ministry said targeted assistance and the adoption of smart farming technologies such as biofloc systems and high-density polyethylene cages under the PPIA matching grant helped around 300 farmers improve efficiency and capacity. Now, the fisheries sector recorded an upward trend, though the third quarter of the year contributing about 9.18 billion ringgit in gross domestic product value. Overall, KPKM said its 2025 performance underscores the ministry's ability to advance Malaysia's agri-food sector through technology adoption, data-driven policy making, and strategic partnerships, with food security remaining central to broader economic and social development goals. Now, we'll now take a short break, but don't go away. We will return shortly with corporate news developments following the break. Welcome back to the Midday Roundup. Let's continue with corporate news developments in Malaysia. Our first story, Petronas National Berhad, through its subsidiary Petronas LNG Limited, has signed a sale and purchase agreement with CNOOC Gas and Power Singapore Trading and Marketing to supply 1 million tons per annum of liquefied natural gas (LNG). Now, in a statement, Petronas said the agreement builds on its long-standing relationship with CNOOC and further strengthens cooperation in LNG supply while supporting China's economic growth as well as clean energy transition agenda. Now, this deal aligns with China's dual carbon goals of peaking carbon emissions before 2030 and achieving carbon neutrality by 2060. Now, Petronas LNG Marketing and Trading Vice President Shamsari M. Ibrahim said the agreement marked a deepening of ties between both parties, and he also added that Petronas viewed the deal as an elevation of its relationship with CNOOC, advancing a shared commitment to energy security and a lower carbon future, while reflecting the continued development of a long-term partnership beyond LNG supply. Now, Shamsari added that Petronas remains committed to delivering reliable and cleaner LNG solutions and will continue working closely with partners to support shared energy transition goals. Now, the long-term agreement reinforces Petronas' position as a trusted LNG supplier to China and highlights its ongoing collaboration with CNOOC in one of Asia's most dynamic gas markets. Petronas said that as demand for lower carbon fuels continues to rise across Asia, it will leverage its established LNG portfolio to support customers' evolving energy needs as well as throughout the region. Up next, we have some business updates. Stratus Global Holdings Berhad is seeking a listing on the main market of Bursa Malaysia as it looks to scale up its presence in the global semiconductor automation space. Now, the company, which provides factory automation solutions specializing in clean room automated materials handling systems, said its IPO will involve the public issue of 356.25 million new ordinary shares. Now, according to Stratus Global, proceeds from the IPO will be used primarily to expand its facilities, support overseas business growth, and also fund research and development activities. In a quote, the company said, "We plan to expand our overseas presence through the establishment of sales and engineering support offices in Asia, Europe, and the United States." The company also noted that Asia and Europe are among the leading global semiconductor manufacturing hubs, while demand for semiconductors is expected to continue growing worldwide. Now, in this regard, Stratus Global has identified Japan, Taiwan, Germany, and the US as priority markets for its international expansion. Now, the company said establishing a physical presence in these regions would enhance its visibility, strengthen sales outreach and also customer support capabilities, and broaden access to opportunities across both front-end and back-end semiconductor markets. Stratus Global added that the planned listing and expansion strategy are aligned with its intention to broaden market coverage in tandem with the projected growth of the global semiconductor industry. Finally, we'll be wrapping it up with some major corporate developments and deals across Malaysia. Here are the headlines. At number 1, we've got PMCK. They posted a 2Q net profit of 5.76 million ringgit on revenue of 25.42 million ringgit. They've also declared a first interim dividend of 0.12 cents per share. Now, for our next headline, for the 6 months ended October 31st, the group recorded a net profit of 6.6 million ringgit on revenue of 47.8 million ringgit. Our next headline, Chitta Global's consortium secured a 21 year PPA with TNB for a 200 megawatt large-scale solar project in Pahang, with the plant targeted to begin commercial operations in March 2028. Next headline, Kim Dun Corporation. They've won 3 construction contracts in Johor Bahru worth a total of 617.73 million ringgit, and they will be covering service departments as well as residential and commercial projects, with completion timelines stretching from second quarter of 2028 to the fourth quarter of 2028. Our next headline reads, CBH Engineering secured a 130 million ringgit data center contract for the extension of a 275 kilovolt consumer landing station in southern Peninsula Malaysia, with works to be carried out in 3 phases. And finally, our last headline for the day, Hegstar Global entered into conditional agreements to acquire 3 fertilizer companies for a total of 120 million ringgit, expanding its agriculture platform to complement its existing agrochemical business. And that's a wrap for the Midday Roundup with me, Wanizul Islam, right here on Kleverstock. Thank you so much, investors, for choosing us. Stay tuned for more upcoming live stream programs and have a wonderful day ahead. We'll see you shortly.